second video, a review of the past month in my investment portfolio and my movements going forward. This was the first month in a new year that everyone hopes is a lot better than the year that just completed. Since around March 2020, the world has been going from back-to-back lockdowns for the pandemic to the toilet paper crisis to a really peculiar year to say the least. This has changed the lives of everyone, and going forward we should try to gain more than we lost. For me, this made me appreciate how much time I spent doing useless stuff and focus more on things that matter. And this is what I'm sharing with you, my investments for the future. During the lockdowns and the stock market crash, I decided to start investing, and my goal is to create a passive income portfolio that can at least be big enough to support me in case I lose my job for whatever reason, like a lot of people this year. So, starting off, let's review what happened to my portfolio during January 2021. I received dividends from the following stocks: Compañía Energética de Minas Gerais, ticker symbol CIG. I received 12 cents from this stock, a stock that I actually sold last October and owned around 3 shares of it. Gave me dividends this month. I'm not sure about this stock. I have no other details for this company, and this is basically the reason I sold it. I bought 3 shares at a random time and sold them at another random time because this company meant nothing to me and it shouldn't exist in my portfolio. We should never own stocks of a company we do not understand. Now, second dividend payment was from Realty Income, ticker symbol O. Realty Income is a residential company, what we call REIT, and I received 90 cents as dividends from this company, which in fact after withholding tax is 80 cents, and the company's yearly dividend per share is 60 cents. It's not much, but they actually increased their dividend from last year by 5 cents. In fact, especially after the last year, a dividend increase in a company is very important, and they increased it by around 2%. Next up is Altria, ticker symbol MO. I received $3.44 as dividends from this company, which after withholding tax is $2.92 on the 4 shares I own of this company. Next is General Electric, ticker symbol GE. I received 10 cents as dividends, which after withholding tax is 8 cents on the 10 shares of this company that I own. Another payment is from New York Mortgage Trust. I received a payment of $8, which after withholding tax goes down to $7.31 on the 86 shares I own. For this company, this is another REIT company. Also another REIT, and the final payment I received is from Armour Residential REIT, ticker symbol ARR. I received 30 cents from this company as dividends, which after withholding tax is 25 cents on the 3 shares of this company that I own. So this brings our total dividend payment for this month to $12.85 pre-withholding tax and 11.48 cents after tax. And now moving forward, I sold my General Electric shares at the amount of $10.77 per stock, at a total of 10 stocks. And with the rest of my budget for this month, along with the dividends I received, I bought 23 shares of AT&T, ticker symbol T. So, why AT&T? Shares of this telecom media giant have had a volatile 2020. After starting the year just below $40, T stock dipped to $26 in late March's sell-off, and then bounced back to $33 in early summer, but then slid down to another low and then popped back. Basically, they had a very volatile year. Now, for me, this stock is currently a very attractive buy for 2 reasons: HBO Max and 5G. Its dividend yield of around 7% stands head and shoulders above the competition. But this is not the sole reason. If you invest chasing the dividend yield, you're gonna lose your money in the long run. You should compare the dividend yield with the value of the company. So for me, this giant continues to build their 5G wireless network, which is currently the future of media communication and internet in general, and they currently now offer 5G for consumers and businesses in a total of 327 markets throughout the US. Now, within this past year and all the lockdowns and everything, streaming was all the rage in 2020. Lockdown measures enforced due to the novel coronavirus pandemic brought a huge surge in everyone watching TV instead of going out or going to the cinema. And mostly all of us were focused on online streaming rather than just watching TV. Obviously, Netflix is the leader with Disney and Amazon following suit, but in a time when Disney and Netflix are announcing price hikes for their packages, what used to be an expensive HBO Max package now seems much more competitive. And along with that, we have one huge announcement from AT&T for their HBO Max. AT&T made investments in expensive investments actually at the start of the last year, which kind of now will try to start paying off because the last year was very sorry, dismal for all of them. So they purchased Warner Media and announced for 2021 that all Warner Media movies will be a simultaneous release on HBO Max and cinemas. And we are talking about movies like Matrix 4, Dune, Mortal Kombat, Space Jam, and many amazing others that are coming to the platform for a month, each of them, not completely, but still, they're coming to the platform, and I foresee a huge boom in HBO Max subscribers because of this. Now, keep in mind, the dividend that is about to be paid by AT&T for holders of record will not be paid for this investment. This is for holders on record on January 11th they close. So we will not have immediate dividend result from this, but rather we will wait until the next quarter. Now, what this means for my portfolio. I owned stocks of 22 different companies and now I am down to 21 after the sale. General Electric was not taking up too much space in my stock or industry diversification chart, as it was a very small part of the pie, and also it was the only share belonging to consumer good conglomerates industry. With the purchase, AT&T is currently my strongest held position at 61.51% value of my total portfolio value, with SunPower Corporation, ticker symbol SPWR, holding the second position at 11.03% and IBM following at the third place at 9.85%. When it comes to industries, software and IT services are at the top position with 19.45%, and rates following suit with 19, residential and commercial rates following suit with 19.39%, almost identical, and based on the volatility could actually be just the same value. Third place is telecommunication services that rose to 16.51%. Now, regarding my second strongest position, SunPower Corporation, ticker symbol SPWR, you can see here, is basically a company dealing with renewable energy, and it's a non-dividend stock. I bought into the stock back in October 2020 at 16.82 cents per share, and I own 10 shares. Since then, the stock has been on the rise and currently at $54.01, $54.01. which is more than 200% value increase. The stock still has not reached its all-time highs, which was around $80, and it was back in 2017 their all-time high. But during the past year, within 2020, they had reached their all-time low of $2 in the market crash. Soon I will make another video more detailed regarding SPWR and whether it is a good buy for future investors. Now, to aggregate the data, the month is ending with a total amount of deposits of $3,453, with a current portfolio value at the moment of recording the video anyway, $4,319. Moving on to the next month, we are starting with $4,003, and the current value of all the stocks recording the video is at $4,868. So we are starting this month with these given values. The year-to-date dividend remains the same. I copied it instead. I moved instead of copying it. Total change is $865. Let's move this. These are not applicable yet as we don't have any dividend details. Let's see the graphs. The year-to-date for 2020, we saw this before, was a lot lower than even the dividend payments. Even the year-to-date, sorry for that, the year-to-date dividend payments for 2020 is lower than the total dividends I received in the month of January, because, as I said in the past, I was more focused. Well, I was not focused at all. I was buying random stocks that I thought may have value and selling them. Stocks like Compania Energetica, as I said before, which is an unknown stock for me. I bought it, I sold it, it doesn't belong to my portfolio anymore. Now I'm doing more focused investments, and you can see it from the charts as well. The value change of my portfolio has dropped on the first day of February, but we'll see going forward at the end of the month what value my portfolio will have, and we'll come back at the end of February to do another review video for the investments, the dividend payments, the pie, and our movements moving forward. Now, one thing to always keep in mind, I am not a financial advisor, not a specialist in the sector. I am only sharing my personal opinions and my personal portfolio. If you enjoy what you are watching, please like and subscribe so the YouTube gods will raise us with good luck. Thank you and see you next time.